Michael McKee from Bloomberg Television and Radio. I'm trying to connect the dots here. One quick clarification I want to ask about Rachel's question is, you said you need slower growth. You had always said before a period of lower than trend growth. Has that changed? And two, it sounds to me like you're basically saying here that the dot plot's out the window, that every meeting is live with the possibility of a rate increase for right now. It doesn't matter about the turn of the year, and that there's not an objective way to determine whether or not you've got enough tightening in the system. It's just going to be a subjective judgment meeting by meeting.
Well, so let's talk about the dot plot first. So the dot plot is a picture in time of what the people on the committee thinks is likely to be an appropriate monetary policy in light of their own personal economic forecast. In principle, when things change, that's not like a plan that anybody's agreed to or that we will do. That's a forecast that would change, for example. I mean, many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that meeting and the next meeting. But nonetheless, it's out there, and we do personally update our forecast, but we don't formally update the dot plot. So, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out there our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that data. In terms of, we're not really changing the way, in terms of growth, what I said was below potential. So what you have here recently is growth that is temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is what's potential growth this year. People think trend growth over a long period of time is a little bit less than 2%, or I would say just around 2%. But what we've had is with the improvement in the size of the labor force, as I mentioned, through both participation and immigration, and with the better functioning in the labor market, and with the unwinding of the supply chain and shortages and those kinds of things, you're seeing actually elevated potential growth. There's catch-up growth that can happen in potential. And that means that if you could be growing at 2% this year and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could clarify what I asked about meeting by meeting, are we essentially now supposed to assume that it's a meeting by meeting, live meeting with a chance of a rate increase that will be decided on subjective criteria rather than objective at each meeting?
I don't know that I want to just accept anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think 1 or 2 additional hikes. So you're close to the end of the cycle. That was an impression a belief as of September. It's not a promise or a plan of the future. And so we're going into these meetings one by one. We're looking at the data. As I mentioned, we're also, we're being careful. We're proceeding carefully because we can proceed carefully at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
Neil.